Well, let's get started. I'm sure folks will join over the next few minutes, but we've got a lot of things to talk about. Everybody, this is our Practice Habits webinar, and Practice Habits was created to really empower practices and business leaders across ophthalmology with how to implement new technologies. A lot of times, our doctors come to us with a lot of ideas, and the business side of the world has to figure out how do we implement it. And I remember from when I was an administrator, now I'm in recovery, so to speak. Uh, it was always the hardest thing. Our doctors come back, they're excited about the femto. We have no idea how to operationalize something like that or premium IOLs back in 2005. And so this is meant to be a forum that we continue to pile information into every single week to hopefully create a dossier of resources where people can go back and learn a little bit about either how to implement practice work, implement or partner with some of the businesses we have in our craft to support us, but really how to just be better business people. So thanks everybody for being here. I don't know what number this is. We've only taken a couple of weeks off and we started it the week of May 1st. So, it's a lot. And we've had as high as 40 people here, and we've had as many as me and Cade on the line. So, but I do think it's striking a nerve. Hey, Chuck, thanks for joining.
Hey, how are you?
Good to see you. That was sarcastic. Today
Yeah.
we're talking because I can't see you. Today we're talking about private equity, and frankly, it's fun for us to talk about this topic just because we get to talk with one of my favorite people, and Chris and I have been friends for a long, long time. He first came to see me in South Dakota when he was working with Integrity, EHR solution for ophthalmology practices. He was the CEO, and he and his head of sales, Brent, and some of their team came calling, and we've been fast friends ever since. Since then, he's talked. I mean, let's see if I can recount it. There was some work that Integrity then did with eye care leaders. You had a hand in some of the framework of your offerings being foundational in veracity, huge success story. You then got involved through, I think, your talks with a lot of folks in the roll-up world at eye care leaders. I'll give you a chance to defend yourself. But you got involved with understanding the private equity world and the investment world, and you knew that beforehand anyway because you were, the CEO of Integrity. But you were then at the helm of a few organizations that were acquiring practices and an advisor to them. And the most recent one pulled you aside and said, "Hey, we think we have the perfect guy to run this platform for us." And you said something like, "Oh yeah, who's that?" And they're like, "It's you, it's you." and and uh, and all the while, I think a fun story is that you also helped create the investment and invested personally in Navigate, which is a great solution that helps practices. And it's all part of this really strong storyline, Chris, about understanding the backbone of what it takes to run a practice, investing in it heavily so doctors and teams can do what they do best, which is see patients, serve patients, and they shouldn't have to think about all the other stuff. So listen, I mean, I could go on and on. I think the best quality about you is Charlotte, and by
That's
far, but
true.
she won't answer my calls, and so we have you today. So welcome.
Well, thank you, Matt. I appreciate the invitation to chat. One of the things I love about the ophthalmology community is that it is a community, and I've said this to even some of you. If you think of healthcare as a community, ophthalmology is like a cul-de-sac in that community. And I'm fortunate to be working in this industry for many, many years, and it was really, Matt, people like you, people like Dr. Thompson, Dr. Bradall, and I had the privilege of getting to know so many amazing key opinion leader surgeons through that journey with Integrity EMR, and then working to establish the foundation of veracity, and surgeons like Kerry Solomon and Eric Donenfeld and so many others. It just became, not just good mentors, but good friends. And love serving this community, love the work that all of the surgeons that many of us get to support day in and day out do to change people's lives literally every single day. that gets me fired up. So I'm happy to help the community in any way I can.
Well, there's a lot that we can learn from you, Chris, because you have a front row seat to not only, practice management now, but also what is the investment community? What are they looking for? How do they look at us? And so we want to get into all of that today. I'm just going to back up the truck a minute because, I remember private equity being all the rage 2019 or so into 2020. Our friends at Minnesota Eye Consultants had just sold to private equity. Our friend Dick Lindstrom said, "Hey, you guys, you should look at this." And I mean you, meaning Vance Thompson Vision. And we said, well, we're a little less than 1% interested, but we'll listen. And as long as they know that I'm not going to invest too much time.
Yeah.
And we listened, and they have a good game, and they painted a picture of, I think, a world where your growth is funded by people who are like-minded. And the dream of it, I think, is pretty obvious. Now, we decided not to do private equity at Vance Thompson Vision, but we did decide to do all the growing. So we just funded it differently and held on to control. But the model, I can see why it's attractive, right? Because we all envision that what we're going to do daily in our calling, that it can have a bigger impact than just right now, right here. And so give us an overview of, how you got into and why you felt compelled to get into the private equity side of the world on the management and executive side. And then on the heels of that, I just want to get an update, like how's it going?
Yeah. Love having this discussion. Well, here's the irony. I spoke at several meetings that many of you attend regularly back in 2018, 19, and I was very public about how private equity could actually be really bad for ophthalmology. And quite frankly, I still believe that. I think it can be bad. And so at the same time, practices of all shapes and sizes, whether you're private equity backed, whether you're a small private practice, a large private practice, even if you're like in an academic kind of practice, we're all kind of struggling with the same things, right? Rising costs, cost more to employ people. We all have doctor recruitment challenges. So, like at the end of the day, um, private equity backed practices have the same challenges as many other types of practices. And I'm not at all here to try to sell anybody who might be listening to this on private equity because it's not right for everybody. And I do think you got to be really thoughtful about who you would partner with and why. And we can talk about that some today, Matt, if you want, or if anybody has a question on that along those lines. Um, I got involved with the group that I'm serving now, actually as an advisor to them as they were looking for an investment to make, and we ultimately found Vision Innovation Partners, which is the one I serve as the CEO of now. But frankly, when I was working with that private equity firm, I had no intention of becoming the CEO here. Was asked to join the board of directors, and our now executive vice president of business development was the founder and CEO, and he's a guy for whom I have great respect. His name is Mike Dunn. Some of you know Mike.
Yeah.
And so Mike wanted to stay focused on acquisitions and is exceptional at that and exceptional at building doctor trust and in finding the right kind of groups with which to partner. And so our board asked me to step in on an interim basis and support the team, and interim became not interim. And so that's kind of how I got to where I sit here today. Um, what
Well,
was your
I
next?
tell you what, my wife said the same thing. I said, I'd like you to just be my girlfriend for a long, long time. Next thing you know, we're bound by law and she can't, she's not allowed to leave. So
Yeah,
yeah,
yeah.
same thing.
Interesting. Yeah, I'm sure that's what Beth said.
Yeah.
Um,
So
so what was
you've,
your
I mean, you're in an
yeah,
interesting spot, with how you got there. And by the way, I think it's a really powerful pathway because of what you already said about your commitment to um, operational excellence, right? That kind of, I call it the backbone, the spinal column, whatever, the stuff behind the scenes that still are required to run the practice at optimal level. And then now you're in the operator side,
yeah.
dealing directly with the service model. So give us a sense. I mean, it hasn't been the easiest, 5.5 years since private equity became the main conversation. Give us a sense of just overall. I mean, we don't want you to go into any financials for your group, but we do want to understand like how's private equity doing?
Yeah, I think look, in general, I would describe it in one word, and I actually gave a talk about this in an ACOS meeting a year or so ago. I would say in general, it's fragile is the term that I would use to describe it.
Hmm.
There's a lot of opportunity. I think the platforms. When I use the term platform, I'm referring to a group like ours, Vision Innovation Partners. I'm referring to other groups. You guys have heard of these. There's so many. There's 36 actually private equity backed practices in eye care in the United States, and maybe 35 now. And like I said before, many of us are all struggling with the same thing. The biggest challenge with the private equity component of this becoming successful is ultimately the outcome of the investment, right? So operationally, and we can talk about that if you'd like, but operationally, the challenges are no different with this group than they are at Vance Thompson Vision, that they are at Smith Eye Care, in Watson, Illinois. I mean, we all have those same kind of struggles. I think from a private equity perspective, the challenge becomes in the performance of the overall investment. And a lot of times that ties back to initially what was paid for the platform or the initial asset, if you will. And debt's a component of a lot of these transactions. And in some cases, believe it or not, some platforms have debt payments that exceed their earnings in a year. And
Yeah.
that becomes a very difficult business to continue to run day to day, but also makes it difficult to deliver a great outcome. And I think some of those challenges come from the fact that, again, it's challenges that a lot of practices have, whether you're private equity or not. The fact remains we have more ophthalmologists that are retiring and passing away every year than we do that are coming out of residencies and fellowship. Meanwhile, about 10,000 people turn 65 in the United States every single day, and that will continue for several years. And so you look at that supply and demand issue, we got doctors that are slowing down at a faster rate than they can be replaced with, right?
Right.
And that makes it challenging to operate a healthy practice. The other thing that we're seeing, and again, this is not unique to private equity, but um, I'd be interested to hear from some of you who are on the call. It's difficult to find a new surgeon to replace an existing surgeon at the same rate. In other words, if you have a cataract surgeon that's doing $2 million a year, you may not get the new cataract surgeon may not come in and want to work that much, frankly. They may not want to do $2 million a year. And so it's hard to replace surgeons on a one-to-one basis. I mean, those are some of the bigger problems is, making sure that the doctors that become part of a private equity transaction want to stay and want to grow and participate in the value lift that the private equity group is really looking for. And I'll pause
Well, I
there and
think,
see if there's
Chris,
any
to just,
questions.
I'm going to complicate it even more, right? Because let's say we can find a provider that is one-to-one, but is by way of capacity and intention.
Mhm,
And let's say that we will still have a deficit because the number of likely prospects, the aging patient, is going to far exceed even a one-to-one replacement,
mhm.
if they're going to perform at the same level. But even if they do, and they can keep up with that volume, the curve that's also kind of frightening to lay on top of this is reimbursements going down and down and down.
Absolutely.
And then meanwhile, costs are going up and up and up. And so you layer all these things on top of each other, and it's a story of converging forces. And it comes to really pinch at the point of care with the doctor who's making the decision in the room with the patient. And so you turn around and you talk about that with 1,600 people at a time. How do you well, first of all, what is the biggest barrier to having them understand and believe that there could be a different way for us to do our work? I mean, how hard is it for you to get everybody on the same page in an organization that size?
In our organization here at
Yeah,
VIP,
just any organization, but in particular yours, right?
well, I mean, it starts with the doctor, right? The doctor, we view our role, our purpose at Vision Innovation Partners is to protect and restore vision, right? That's our mandate. And that applies to surgeons, that applies to optometrists, that applies to people that are on our RCM team, people that are on our facilities team. Everybody rallies around our purpose is here to protect and restore vision. So, dealing with well, I'll call them macro headwinds like declining reimbursement, rising costs, only so many hours in the day. From a purely business perspective, you start to look at, all right, we've got to look at dollars per encounter. And how do you ratchet up dollars per encounter? And at the end of the day, what we all do, regardless of your role, is we're selling time. And so you've got to maximize the time. But, at least for our platform, and I know many others feel the same way, we're never going to tell a doctor how to practice medicine. And doctors get the freedom to practice medicine the way in which they think that's going to be the best for the patient. And so to get the kind of change that you're talking about, Matt, you got to get the doctors bought in. And so, I view our role here at VIP is to, we can take a couple things at a time. Like, for instance, let's talk premium lenses, right? That's an obvious one that I know we all um, are knowledgeable of. Our role with our team is to make sure doctors know about the technology and that we give them the resources they need to learn about it. And we'll operationalize anything that they would like to have. Now, look, I mean, would we like everyone to use the same exact technology and have the same exact processes? Yeah, we'd love to do that, but we're not a factory, right? And in our case, we're really 26 practices that fly under the brand of Vision Innovation Partners. And so you've got to find a balance of, I think you have to find a balance of providing provider autonomy, giving them the knowledge and resources to make the decisions and have access to resources that might benefit the patient. And synthesize what you can synthesize, but keeping what that doctor wants, I think, is first and foremost. But I'd be
Yeah, I
curious to
think
hear
that's
from the
right.
broader group.
Yeah, let's do that now. Let's hear from the group with the different constraints that Chris just outlined, right? The macro demographic information of retiring providers and rising patients who need care, and then lay on top of that the growth curve of increasing, costs to deliver the care and decreasing reimbursement. Um, who else has comments or questions about that kind of distribution or convergence of forces, Bill?
Yeah, I just have a question for Chris. In your experience, and this is kind of what we've seen as private equity has taken over some of our practices, and some of the doctors are retiring. We have a different generation of doctors that have grown up in a different time, a different work ethic.
Mhm.
Are you finding that too? Because, the baby boomer work ethic for anybody who's as old as me and other generations after that, we really had a work ethic. I mean, we worked our tails off. There was no, saying, I don't want to do this. We just got it done. But now we have a whole new generation of younger doctors who are fresh out of med school with a completely different mentality. Have you experienced that?
Yes, we have, and Bill, I think again, I think that us experiencing that is not unique. I bet every practice represented on this call is experiencing that to some degree. And look, I think some of it is generational. I think some of it's COVID, right? COVID really changed the way people think about going to work. And by the way, that applies not just to doctors, but it applies to a lot of folks that come to work, whether they're working in the clinic or they're working in the back office. So, I think as a country, we've had a shift in work habits that weren't quite the same as they were 15 years ago. And we, as an industry, have to adapt. I think it's one of those other macro headwinds that our industry is facing right now.
Well, and I think to answer the question, even just from let's talk compensation for a second. The doctor type has shifted, Bill, and I think that it's the only time where there's really contrast or maybe some dissonance is when they expect the winnings of the generation before them with the current outline or outlay of
Mhm.
effort. That equation won't work. But if they're willing to say, you know what, I just don't value the output like those who went before me, and I'm willing to have my life be a little bit different, make a little bit less, then I think as business leaders in the practice, at least my role was to say, okay, well, I'm going to then under those constraints, I'm gonna facilitate that to the best of my ability. So you can do only in exactly what you want to do in the time you'll allow. Um, but I think that where the joy is stolen and where people think the model is broken is when they expect something different than they're willing to put into it, just because.
Mhm.
And I think that makes it's pretty common sense. But but I'm okay with the next generation, and I find them most happy when you just say, no problem. We can have it be exactly like you want. By the way, here's what your first year's forecast looks like.
Yeah.
And if you're cool with that, great.
Yeah. No, that's spot on. Like I said, we have to adapt, and we, surgeons put aside the dollars of production, because there are some surgeons that are new surgeons that I know, some of them I know very well that are, I mean, they're working 3 days a week and they're producing $4 million a year.
Yeah, it can be
And
done.
it can be done, if you've got the want to and the skills and the proper support resources. So I think for us, as it relates to like attracting doctors and retaining doctors, we try to adapt. Like what can we do? What is the perfect alignment of what you want for you and your family? And let's figure that out. So we're very highly adaptable on that front.
Chris, I want to just come back to the market at large here really quickly and just ask, kind of from a meta standpoint, are there still deals to be had with private equity groups looking at each other or looking at other practices? Or because of the environment we're in, is it just is everything stale?
I'll answer that from maybe two angles, Matt.
Yeah.
I get this question a lot. Um, there are, if I looked into a crystal ball and gave you my guess as to what's going to happen over the next few years, I think what we're going to see over the next few years is that 35-ish number of platforms is going to become a smaller number because they're going to start merging together, and we've
Hmm.
seen that already in a few instances. um, I see one name here where I know that we've got at least one represented on this call today who's on the integration side of one of those mergers. So I think we'll continue to see that over the next few years. And I think, even with our platform, we've seen more deal flow on what I call the tuck-ins, right? So the tuck-ins are assets that we plug in, they're anywhere from a few $100,000 of EBITDA to a few $1 million of EBITDA, and we tuck them into our support system. We've done a few deals this year. We actually have a few that'll close hopefully before the end of the year here. So we're starting to see more interest in tuck-ins. Um, but it does kind of come back to that fragility that I mentioned. There are some platforms that just can't do a deal right now because they're still, they're still
Their
integrating.
debt structure or things like
Their
that. Yeah.
their capital structure doesn't allow them to
Yeah.
to make some of those investments, and so there are some platforms that'll be constrained for a little while here in that regard. But I think the other thing that is happening is valuations are not going to ever be what they were in 2018 and 2019. And I think that's, candidly, I think there's some surgeons that may have wished they would have sold back then. But the reality is it's a much different time, right? Interest rate environment's different, but I also think that in the case of private equity, the private equity investors, many have learned that, wow, sometimes there's not as many post-close synergies to go and get. I think some private equity backed groups thought, oh, well, one way to grow a practice is we'll get the doctors to do more premium. Well, I mean, now that's a lever to pull, but you got to convince the doctor that that's the right thing to do for the patient. They have to make that decision, right? And so I think valuations will come down and are coming down. And look, I don't think. I guess it's a third. So one is the platform consolidation, two is the tuck-ins, and then the third option could be, is there another platform to be created like a new one? And I don't see that happening. I don't see a brand new private equity firm coming in saying we're going to establish a new platform in pick a market and begin to build what many of us have already participated in building. that makes sense.
Yeah, got it. And by the way, this makes me remember something that I'll call him a friend of mine, but he's mentored me in a lot of ways. But Andy Corley said, it doesn't matter what you're doing, just bring value. Whatever meeting
Yeah.
you're in,
Yeah.
bring value. And whether you're the doctor who's wanting to seek a tuck in, or you're a practice manager who's trying to make sure you're still on the roster in a couple of years, if you're just asking yourself, what value am I bringing? I think that's going to keep you on a pretty good straight and narrow for, uh, not to be redundant, but being a valued member of the team.
Boy,
Um,
I adore Andy Corley and consider him a mentor. And you think about that advice. I mean, that applies to literally all aspects of life. You could apply that statement to your marriage,
yeah,
to parenting, to your friendships, right? Isn't that a great statement? Add
it
value
is.
everywhere you go. It's great.
Great value. Yep.
That's
Uh,
another component, Matt, that I might want to just touch on for
do.
any practice that might listen to this or is listening to this, and you're considering a transaction with a private equity group. Another thing that I think we'll start to see more of is enhanced um, post-close assurances that the doctors that are there are going to continue to be there and produce. And there's various ways to structure those types of assurances in a compliant manner. But I think a lot of groups kind of got surprised by, doctors checking out after they got their first big check. And so I think we'll start to see more assurances on that front as well.
That's where I was hoping you were going to take that comment, which is that I think we're going to start to look less at the acquisition date and start to look more towards the acquisition date. Acquisition date is actually the starting line.
Yeah.
With the promises all held at the first of hopefully many finish lines.
Yeah. One thing that you're spot on with that, and I'll just add to that, Matt. Um, as the CEO of Vision Innovation Partners, I am not interested in partnering with new practices where the main surgeons are quote unquote looking for an exit.
Yeah.
And I hear that so often. We're not looking to help doctors exit. We're looking to help practices grow. And I can assure you that every private equity backed firm that's listening to this would agree with that statement. And
Well,
so,
it's back to your first point, Chris, which is, and I'll say it more simply than you did, but the doctor is the asset. So exit means that that asset has been expunged.
yeah, I mean, at the end of the day, private equity backed practices really are focused on value creation. And I suppose that's one thing that may be different than perhaps a standalone a practice that's happy with where they are. And there's no problem with that, right?
Yeah.
And I
Well,
listen,
and it's where we started, it's where I started my career, which is we
yeah,
always knew we were successful because our doctors took home more than last year.
yeah, yeah,
But nothing of enterprise value,
right,
nothing on what do
right,
we do in 30 years when you're not going to want to do this anymore?
right.
How do we create long lasting, value? And there we are back to the same word. So listen, I want to, we could keep going for a long time, but I want to make sure we get some questions answered and we've got some smart people on the line.
Yeah,
And
let's do it.
I'm here too. And so who has a question for our friend Chris? And in case you didn't notice, by the way, winning the first award for being in studio is my friend Joel Gaslin. He's just off camera here,
Oh, how
and
about that?
you
Yeah.
too can be in studio if you were to if you wanted to at any moment in time. I'd be happy to host you in South Dakota on a cold and blustery day like this. Chuck, what kind of questions do you have for Chris?
Absolutely. It's a first of all pleasure to meet you here, Chris. I'm a practice down in Louisiana with 10 locations now and 20 providers, and so practicing. The practicing providers are both optometrists and cataract and refractive surgeons. We're a cataract refractive outfit for the most part. One of the things that I've been trying to look at are some opportunities in the AI space with accomplishing some, economies of scale goal, particularly in the area of reimbursement, Any success stories that you can share from recent or not so recent of delivering, some extraordinary cost savings to the businesses
Yeah,
from either the deployment of AI or just some of the standard, roll up of administrative services?
yeah, it's a great question, and I've got great respect for your practice, by the way. Yes is the short answer, and I was hoping we would get to this. So, and I'm going to answer your question, Chuck, but let me make one comment. We talked about the macro headwinds that we face. Declining reimbursement, rising costs. Yeah, trying to increase dollar per encounter, that's great, but there is a limit to that. And so then you got to go look at the cost side of your P&L and figure out where can I get cost outs in a responsible way that number one doesn't impact patient care, and number two continues to drive value and provide a good culture for the team that's supporting the practice. We have looked at AI, and we are in the process of deploying some AI in various aspects of our back office. And it's working really well. I mean, for instance, we've got some outbound calling capabilities that are pretty impressive. And it's interesting. We've taken the approach of not running down that path um, purely to save money. It's also to increase the patient experience, right? And increase, maybe it's increased lead flow, maybe it's increased response rate, things like that. But I would suggest for any practice leader that is listening to this meeting, if you're not looking into AI, you're probably already a little behind the ball. And so I would be looking at that from how your calls are handled, how your leads are handled, how your billing team works. If you're doing that in-house, I would be looking at all of that. On the clinical side, it kind of ties back to what I mentioned earlier. We're introducing these concepts to our providers, and in our case, we have a medical advisory board that's fantastic. And so we're in the process of introducing, like, hey, these are some things that we're hearing at various congresses and various settings, et cetera. Take a look at it and let us know what you think. Many of you are on an EMR, probably all of you are on an EMR. Your EMR is developing these capabilities. And so I would encourage all of you to have your doctors begin to learn about these things. I think it's going to be a little bit before the broader clinician community embraces AI on the clinic or surgical side, but it is coming. And I feel very strongly that AI is not and should not be viewed as a primary way to replace people. It should enhance the practice. It should reduce some other costs that you might have. It's interesting. I was at a very large um, meeting around AI this year, and the CEO of a highly regarded technology company made it really clear that AI is not and should not be a primary thought of as a people replacer. It should be viewed as a people extender. And I think if we have that mentality for our practices, we're probably going to set up our teams and our doctors for success. I hope that was helpful,
Thank
Chuck.
you.
You
Yep.
bet.
Yeah, I like it. I like it. What other questions do you have?
I have a question.
Dylan.
You mentioned you don't want practices where the lead physician is planning on exiting the practice, but isn't that why they look to go to private equity for the most part?
This is the challenge. That sounded like Dylan. This is
Yeah.
the challenge, and so uh, yeah, I think that's part of the problem is doctors, and I've been very public about this. Doctors who are looking for just a check to walk away from the practice should be thinking about a different way to exit their practice in a way that's going to add value. They need to be looking at who's replacing them. They need to be recruiting another surgeon in before they're going to get the kind of valuation that they're gonna want. Um, and I've given this advice to so many groups. Like, if you've got a surgeon base where they're going to be on a retirement path in the next 2 or 3 years, and you don't have surgeons on the team to backfill them, you're not going to get any private equity investor interested in that because it's the dollars are from the doctors. And um, practices like ours, we're buying earnings. And if the earnings go away in the form of retirement, then the valuation of the whole asset goes down. So they shouldn't sell to anyone for just a check. Doctors should partner with private equity who want to grow and who believe in the growth and who ultimately get the value out of that next turn of rollover equity.
Dylan, and I don't think Chris will answer or can answer this because he's got a unique role, but I'll just say what I would think is that the ideal practice candidate is the doctor who perhaps is 7 years or so from retirement, who
Mhm.
wants to look ahead and figure out how do I maximize the legacy of what this practice can be. I've got a couple of prospects that I want to have join my practice, but I need some capital to figure out how to really you know, expedite that. Enter this injection of support that's now sustainable and scalable. Long after I'm gone, the younger providers can step into my volume and that can be sustained for the long term, bringing value back to to those doctors who joined me, and then to the organization that injected the capital in the first place. Now, that's my view. We know when we were looking at private equity at Vance Thompson Vision, and remember, we were only 1% interested, and after we talked to them, it went down, not up. So, but it was very clear that we could get a high valuation for Vance's reputation and equity.
Yeah.
But it would be in some ways mortgaging, some of the future of the younger doctors who maybe didn't have the capacity quite yet to step into that volume. And if we were to like hold our breath and create the value first, the enterprise value would go up. And ultimately everybody wanted to kind of hold that back for themselves. But we're doing all the same things. They're doing all the same things. I still say that they would have done were private equity involved. But Chris, maybe you can critique me there, okay? Because on the earlier part, because I'm not in private equity, that's just how I would look at the preserving the value and how I would comment on the doctor who's thinking of using this as an exit plan.
Yeah. I talk a lot with acquisition targets that we're looking at about protecting and extending their legacies. I love the word legacy. It's just so impactful. Google it. It's a fun word to Google. Um, but yeah, I mean, that's spot on. And I think you got to go back to why do a deal, right? Like Matt, I suspect that Dr. Thompson and Burdall, et cetera, and the team, they went into it thinking we're going to learn more about it, but there's a lot of groups that don't need to do a deal with private equity. They're just fine on their own. There's probably several on this call that are just fine, and you're gonna be just fine. But and this is where I think, those of us in positions of leadership on this call, we've got to help. I think we've got to help our owner doctors understand that if the goal is to maximize value, then let's have a meaningful discussion about what that means. Because what it does not mean is wait until the doctors finally decide to sell, and then everybody's also, trying to pick their new beach house or boat house or golf course membership because they're going to slow way down. It just won't work. And the other thing to keep in mind on that front is yes, owner doctors get most of the time, owner doctors get a nice check when the transaction's closed. That check is a percentage of the enterprise value that owner doctor or doctors created. Okay? The other percentage lives in rollover equity. So if you've got doctors that are just walking away from the rollover equity, then really they sold their practice for a lot less than they should have. And I love having that kind of conversation with a
Yeah.
doctor because, like, if we're really about creating value, you're basically saying I'm not worth as much as I should be. And I think that's an interesting perspective to help bring owner doctors.
Now, Chris, I know that there's probably some more questions, but I want to shift gears a little bit because in your endeavor to maximize the way that practices are supported, you and a friend of yours from PwC saw a need, and and I believe in one of the most humane ways possible. And by the way, full disclosure, I'm an investor in Navigate, but an educated patient, a patient who comes in, with some kind of ailment, but is already pre-educated about what their options might be, especially in today's day and age where there's so much information out there that could be erroneous or just too much. Um, Seems like there's almost nothing more powerful than that one-on-one pre-communication. Just give us a sense of why you wanted to put your own personal hard-earned dollars into a system like that.
By the way, I did not ask Matt to ask me that question. Um,
It's true.
listen, I love the eye care space. I'll answer that question by telling a very short story. Um, when we started Integrity EMR, I was in my early 20s. I could not tell you the difference between an ophthalmologist and an optometrist. I couldn't even tell you the difference between a cataracts and glaucoma. So I had a lot to go learn. And so one of the ways I learned this industry is I was the guy that would go to um, meetings like ASCRS, and I'd sit in the back of the room and I'd listen to people like Vance Thompson give a talk about complex surgical cases. I'd listen to people like Dr. Stephen Dell talk about, advanced technologies. I'd listen to Dr. Steve Slade, who is also a great friend of mine, talk about all of these advancements in eye care. And so I began to appreciate, number one, I learned the industry, but I began to appreciate the value of the premium channel. And then I started developing relationships with giants in the industry like Mr. Andy Corley and Jim Mazo and Tom Frinzi, and I can Bill Link. I continue to go on and on down the list. And I saw a disconnect. And so I remember sitting in Kiwa Eye. I don't remember the year because I'm bad at remembering years, but I was at the Kiwa Eye meeting and I was in the back of the room and I was listening to Dr. Kerry Solomon talk about the Calhoun lens. And some of you remember what that is now called, or remember that it used to be called that. So Dr. Solomon was talking about this lens that was going to be a premium lens that was going to have this adjustability. And on that day, it kind of clicked for me, like, okay, wow, this premium channel is a really big thing for patients all over the world. But I started thinking about the conversations that I was having with industry giants, and there was this disconnect. There's these hundreds of millions of dollars getting poured into R&D to develop all of these premium lenses. But the adoption rate is like, at that time, was like 10%. And industry giants were complaining, why is the adoption rate so low? So I began to study, why is it so low? And so you go into a practice like Dr. Solomon's, and what I quickly learned was, and Vance Thompson's practice, what I quickly learned is that naturally the practices with the highest conversion rate were the best at patient experience and patient education. And then the practices that weren't good at converting weren't great at educating and weren't great at patient experience. And then you start to think about how to fix that. And it occurred to me and a dear friend of mine who is an expert in patient experience that it's a shame that we're asking a patient to sit usually in front of a desk in a small windowless office who just learned that they have cataracts. They just learned what a cataract is. And some doctor who they probably just met said that they're going to have to go surgically into the eye, take out a part of their eye, and put a fake part of an eye back in. Okay. And this whole now the patient sitting in a windowless office talking to a surgical counselor who's now telling him, oh, by the way, you have an option to spend a few $1,000s to make things a little bit better. And we're asking them to make that decision all in the span of like what, 15 minutes? A once in a lifetime decision. And so we thought that was a shame. And that was the genesis of what became Navigate.
Yeah, I think it's so powerful. And listen, for more on this, this was just from a talk that we gave at the OSN meeting in New York, which is so, I was asked to give three main points on how to make 2026 better than 2025. And one of the 3 points was your attention to premium. Now, at the end of 2023, Alcon did a survey of patients of cataract age nationwide, and only 51% of them, 51% knew that there was even an option that was looming over their cataract decision when they have it. This is 20 years later, right? And so Well, I mean, we have such a that's by the way the juggernaut in the cataract space. I know you all know that, but I mean, just you just think of how much more impact we have to make sure that every patient, my goal has never been that every patient has premium. It's just that every patient know that they have the option. That's just informed consent, and we're not
Yeah.
there. The other two categories are the other ones we tackle on this call, which is interventional glaucoma, which should be far more performed than it is today. And then I think that we're at a time with refractive surgery where patient interest is what it has always been. We're just not finding them in the same space. They're searching in other ways, they're learning in other ways. And, Dr. Thompson, who will feature here sometime and will actually be in our office in just a few minutes, he just recently held a seminar, like old school, in person, real people coming into a clinic with cookies and Diet Coke after hours, and 188 people signed up for the seminar, and 88 actually came.
Hmm. Wow.
What are we talking about? And so we have to go back. I think we have to return to some of the basic education because it's
Yeah.
so ubiquitous and so hard to sift
Yeah.
through. I think that we need to, like Navigate does, I'm back to that, but like what a great solution to make sure that our patients, our likely prospects are informed properly and put them back in the driver's seat. For more on this, by the way, and it's a decade-old book, but a great indictment of healthcare and how we do education is The Patient Will See You Now by Eric Toffel. And instead of The Doctor Will See You Now. A great juxtaposition there. But listen, Chris, I could go on and on about your commitment to the patient experience and certainly about mine, because I believe it's the summation of my life's work professionally. But one, I hope you'll come back. And thanks for just talking about private equity today, but also talking a little bit about some of the other things that were passion projects for yours: Veracity, Integrity, Navigate. We've had Chris Bonsall on before, Joel Gaslin, who's the CEO of Navigate, is sitting right next to me. We've been friends for a long. He met me on my third day in ophthalmology, so he knows how much of a hack I am. And but a lot of you have other offerings that are very similar. That they're out to really help the practice. And I guess in closing, we have, I think, one more session between now and the end of the year. And I'll pull that one up here in a minute. But the biggest favor you could do for us is to continue to ask your colleagues and friends to come to this session. It's free. We're just talking about things like that, where I feel like things like this, where I feel like the more people understand or talk like this, the better they're going to be um, as a business. And so we get to all grow up together in the field, so long as we're sharing knowledge here. Our next session is with the CFO of Vance Thompson Vision. He's a longtime friend of mine. He went to school together at the Harvard of the Midwest, Augustana University. He started about 12 months before I left Vance Thompson Vision, and a smart person. But he's going to give the other side of the story. Chris is talking about macro pressures and how that affects a large institution that's backed by private equity. Mark is going to talk about how small private grows amidst those pressures as well. So that's going to be a really exciting session as well. And Chris, I'm going to leave you with one question, and it's a tough one. And it's of all of the people that you've had a beer with at the Bulldog Saloon in Whitefish, Montana, who do you think is your favorite?
Yeah, there's only one name that comes to mind.
Do tell.
And that would be Matthew P. Jensen.
What?
Um, true, true.
Me?
Kate Wilcox was almost is a close second. Um, but
Breakfast, not beer.
Oh,
You're the
really?
beer,
yeah,
Oh,
you're the beer guy. I'm the late
Cade, we should go. Cade,
breakfast
we should
guy.
go there sometime
yeah.
and not invite him. Listen, everybody, thanks for coming to these sessions. It really does mean a lot, and I learn something every time. Chris, you're doing a good job. Thanks for doing it.
Hey, thanks for the time, and happy to have these kind of conversations anytime.
Good.
Thanks for the invite.
Talk soon, everybody.
All right.
Bye-bye.
Thanks, guys.